So, remember how I told you guys last week that the Fed announcement on Wednesday didn't do very much to move Treasury mortgage interest rates lower because the markets had already worked that movement into the pricing that we had. So everyone was certain it would happen, right? Just wait and see what's happened since then. Hi, my name is Russell McDonald. My company's name is Tradmore, which stands for Trusted Advisor Mortgage. I'm a mortgage broker in the San Francisco Bay Area. Here's your daily update. Last Thursday, the day after the Fed announcement, we had some very negative economic reports, as well as concerns about Brexit and the trade war not going as smoothly as had been expected. This news moved both Treasury and mortgage rates lower by around 1/8%, which is huge. When the Fed did their announcement, it only moved things by a few hundredths of a percent. Now, on Friday and Monday, the economic reports that came out were looking stronger, and the trade war news is now sounding like we're closer to making a deal happen. So most of Thursday's gains in the Treasury and mortgage interest rates have been erased. This morning, we had a report come out from the Institute for Supply Management giving us information about its service index, and it came in way stronger than last month and stronger than was expected. In September, it was pretty strong. It came in at 52.6%. For October, it came in at 54.7%. Now remember, on these types of reports, anything over 50% always indicates growth. Because of all this, mortgage prices today came out slightly worse than yesterday. Towards the end of the day today, we had midday price increases that actually made home loans slightly more expensive than just before the Fed action last week. Now, part of what is making Treasury and mortgage interest rates move higher is the fact that it's looking more likely like we're going to have a deal come together in the trade war between the US and China. However, China is now saying that the US must roll back some of its new tariffs in advance of any visit by Xi Jinping to the US to meet and negotiate the terms of the trade war and hopefully sign a phase one deal to put all this behind us. Anyway, the fact that a deal looks more likely is giving the markets confidence in moving forward and helping push stock prices up, but this is also pushing up interest rates for both treasuries and mortgages. Today, Tuesday, November 5th, was the second day in a row that both the Dow and NASDAQ hit record highs. You know, things like that, when they happen, that tends to push mortgage and treasury rates higher, guys. It is what it is. Now, anyway, part of this market optimism is that it looks like the U.S. might delay tariffs on $156 billion worth of Chinese imports that are scheduled to start on December 15th. They're also negotiating whether or not we will roll back some earlier tariffs we started back in September. If any of you have questions about how this affects you, please let me know. You know, we're still sitting on some of the lowest interest rates since November of 2016, so we're in good shape as we finish out the year. If you have any questions on what is best for your situation or some advice that you may need to give to your clients, reach out to me at any time. I want to be a resource to you. Even if you're not in California and I can't help you directly, I can at least point you in the right direction. I'm one of those guys who thinks that a rising tide lifts all boats. And I've got a great network of friends all over the country that do what I do. And if for any reason I can't help you, I can find you someone who can. And so anyways, let me know if there's other things you want me to talk about. I'm going to be putting together some more content about credit, other financing and real estate information, and just anything that comes to mind. So if there's anything that you think might help you in information you need to present to your clients, just shoot me off a message and let me know, okay? Thanks for watching. Have a great day, guys.